SPACs are back. I don't know if you saw in the news, but Friedberg launched a SPAC. Friedberg,
way to go. No. He announced a target and a merger agreement.
Incredible.
So now he goes into the de-SPAC process.
Now we have 2 out of 4 besties have SPAC'd. Friedberg, you want to tell us about what you SPAC'd?
Well, I mean, we announced that we're merging the Production Board SPAC, which is TPB Acquisition Corp, with Lavoro, which is the largest agricultural inputs retailer in Brazil and operates across Latin America. You know, we've got a good slide in the presentation that I think echoes some of the points I've talked about on our podcast here about the importance of having resiliency and redundancy in global food supply chains and increasing famine risk. So we've got a slide that shows for about 30 years, you know, we've reduced the number of people globally that have been undernourished down to about 600 million as of about 3 or 4 years ago. And in the last 3 years, we've seen that number spike back up to 800 million, which we thought we were done with global famine. And now here we are facing these issues again, climate change, the lockdown, supply chain disruption, the Ukraine war, and all the other geopolitical tension issues. So that's been a big thesis of mine individually. You guys know we've talked offline about some investments I've made and my strong interest in the area. Brazil and Latin America is the largest ag export market in the world. So they produce calories for the rest of the world. And farmers there largely lag in terms of technology adoption. I've got a nice Brazilian farm as my background today, but technology adoption doesn't look like it does in the US. There's a huge opportunity to influence and drive productivity up in that region. And so we partnered with the largest ag retailer. Ag retail is the local locations that work with farmers. They have these teams called agronomists. They meet with the farmers typically weekly, help them make decisions about what products to use, what to do, how to do it. And so with the footprint and the reach that they have, I think we can really drive up productivity per acre across the region, increase total global calorie production. And that's why I'm so excited about it. Fundamentally, it's also a great business. It's all the financials are presented in the investor presentation and will be published with the SEC here in the next couple of days. But it's a scaled business, it's a profitable business, and it's growing pretty significantly. So it's got great tailwinds. It's a great base business. But for me, there's huge opportunity to continue to drive drive technology through the platform that they've built. And that's why we're also making a $100 million investment off our balance sheet into the company.
So that's big skin in the game.
Big skin in the game. And we put 2/3 of these founder promote shares. They only vest if we can hit the stock price of $12.50 and $15 over the next 3 years. Otherwise, we lose them. So we've really tried to align ourselves with shareholders and really put our money where our mouth is on this and show people that, that this is a real strategic partnership for us. It's not just, an investment that we intend to kind of, hold for a short period of time. This is a key platform for me, for our TPB business, and for many of the companies that we operate at TPB. So I'm super excited. It's been a long time coming. It's been a very hard process, as Chamath can attest. And as we all talk about, capital markets are very difficult right now. Getting a transaction announced is the first step. Now there's a bigger step of getting it closed. But a lot of work. But I'm super excited about this.
And
so thanks for letting me talk about it. Yeah.
Well, and the other thing I just want to double click on there, Chamath, this idea that 2/3 of the sponsor promote have to hit certain hurdles. I think that's probably a pretty good thing for folks who maybe want to invest, to just say, hey, yeah, this is great. There's some alignment in how these shares get distributed. Yes.
I mean, I think it's a good feature. I think that the thing with SPACs in general in a moment like this is that it actually performs better in periods of high volatility. And the reason is because, you have this redemption feature, which essentially allows you to get back your basis. And so meanwhile, while, Friedberg was hunting for a deal or whatever, that cash, that you've contributed into the SPAC sits in a savings account that then actually is generating some, reasonable interest as rates go up. So the whole combination of all of this stuff actually makes SPAC a pretty good risk-adjusted vehicle when the markets are highly volatile. Because if at any point you don't like how you feel, even if you love the deal, you just vote to redeem, get your $10 back. And effectively, when the market, right, let's say the market goes down 30% from here to March of next year when Friedberg's deal closes. Well, an investor could theoretically just say, you know what, I just want my $10 back. Now, all of a sudden, they've gotten zero they felt 0% of that drawdown. And that's what's so interesting about the structure in a moment like this. So I think there's a lot of really interesting features that that SPACs in the future, I think, will have to incorporate in order to be a successful tool in the toolbox.
One thing I learned from, I guess, the Pattern AG company that I think you incubated as well, or was that a company? Yeah, you incubated as well.
Yeah, and you guys invested through your launch platform.
Yeah, right? So we invested in the syndicate. Is that the way this retail works? Is you have farmers, but then there are these retailers or these sales reps, I guess they call them in the industry, that service the farmers. And
that's right.
so that's
farmers
what this.
That's
farmers
exactly.
don't have this technology. Yeah,
that's right. They don't know. How else is a farmer supposed to know what to buy and what to do? So ag retail, the local retail store, the people that work there are called agronomists. And so the agronomists are like technical salespeople. They understand the science and the technology of farming. They understand what the farmers have done in the past. And then they partner with them to help them decide what to do going forward, what products to buy, how to use them, how to get the most out of their land. And so when new ag technology comes to market, it's the retailer that can influence the farmer to make a decision on making a switch or using a new tool or using some software, to drive that decision. And so that's why ag retail is so important and why it's critical for any new technology to get adopted in farming. It has to go through retail. There's the big ag input companies. They're the seed companies and the chemistry companies and the protection companies and the software companies. They all don't sell direct to farmers typically. They're going through these retailers. Is
there a version of Lavoro that's an American company that's public or not?
Yeah, it's called Nutrien. And so Nutrien owns CPS, which is the largest retail chain in the US, ag retail chain in the US. About, I think, 70-80% of Nutrien's business is actually fertilizer production. And then the rest is the retail business. That's the key comp that we actually show in our financial presentation that we published yesterday.
How is Nutrien done just as a public market? Do people understand sort of the value that it creates in the marketplace?
Yeah. So in the last year, as we've talked about on the show, companies that are in the fertilizer business are making money hand over fist because of the issues with the supply chain for natural gas, potash, and phosphates. And so if you have access to supply, like Nutrien does and various other fertilizer companies do, you are absolutely minting money this year. And so they're having record earnings right now. And, people are kind of estimating that the fertilizer market will kind of reset. And as a result, these companies are over earning right now, which means that they're getting low forward multiples. But generally speaking, these businesses have done very well. And one of the, I would say the US is about 15 years ahead of Latin America. And remember, Latin America produces and exports more calories than the US. And corn farmers in Brazil, for example, are only getting half the yield of corn farmers in America, or a little more than half yield per acre. And the reason is the retailers in the US are so sophisticated that they're introducing services and they make a bunch of money selling services now. That wasn't the case 20 years ago. So now they're offering farmers advice using software and other kind of custom, soil testing services and whatnot. And that's really changed agriculture. It's given farmers data that they didn't have before and helped them make better decisions using that data that didn't exist before. And that's really, I would say concentrated in the US, that kind of sophisticated behavior. I think it's really important we see it happen around the world now because we need to grow more food and we need to do it without expanding land and acreage. And so on. And we need to do it more sustainably, which is another kind of key part of this.
Did you worry a lot about like the FX risk of, all these inputs coming into Brazil, having to deal in local currency, then having to kind of get the revenues out into US dollars and all of that stuff? How did you think about that?
Yeah, it's a good question. So when all ag commodities around the world, most commodities, right, they trade in dollars. And so, if the dollar strengthens against the local currency, the real, the farmers actually make more money and the input companies charge more money in local currency. So basically the entire ag market and around the world commodity markets, generally speaking, inputs and outputs trade in dollars. And so if you're a local business, you actually make more money when your local currency goes down and you're willing to spend more money. And so businesses in a commodity cyclical business generally are currency hedged because of that, because they're selling stuff in dollars, and then as a result, the places that they're buying stuff from charge them more in their local currency, and they can still make a good spread. So, there may be fluctuations in FX risk, but generally speaking, I think we see, and I'm just speaking generally here, not about this particular transaction. We generally see, and we saw this at Monsanto, so that's a good example. All ag input companies, when the local currencies devalue in a market that they're selling into, they charge more. And the farmers can afford to pay more because they're making more selling their product into the market.
I think this company is super interesting. So I'm rooting for you. It looks really, really cool. And it seems like a very good entry valuation, good margin of safety too.
Yeah,
$1.2 billion valuation, if I'm reading correctly here. So yeah, congratulations. Hard to get a deal done at this time. For people who don't know, FX, foreign exchange, just trading $1 or one currency for another.